Just give us your read on what's happening now with the gas and the oil markets. Have we peaked on prices? Are we seeing conditions ease?
Yeah, good morning. Thank you. Well, our call is that we haven't peaked on oil prices, but that we probably have peaked on gas prices to a degree. This is somewhat of a mood statement in the sense that gas prices have rallied so much. But from here on, we would be a little cautious. Much has been made about the low level of inventory in Europe when it comes to natural gas. These inventories are low, but they look especially low if you include the years 2019 and 2020, which had exceptionally high levels of inventory. If you take those years out in a historical context, the inventory situation doesn't look too bad. We are close to the point where we have enough inventories where we can even survive a very cold winter. Inventories are building by now. They continue to fill. There's already some demand destruction taking place. And we would say it's probably likely that, particularly as November starts, some more Russian supplies would be forthcoming. So there are more than enough reasons to expect that natural gas prices should cool down a little bit. Oil prices, which have rallied, but by no means as much, there is still a great degree of tightness and increasingly also a long-term story to be told.
We've seen a lot of finger pointing at OPEC, and I think there was broad disappointment from the consumer level that there wasn't a shift in the agreement to supply more. Do you think that that is the right target at this point? And do you think that there are any prospects of OPEC actually shifting the current supply agreement next month?
Yeah, no, look, I would say that is not the right thing to do. Look, what's simply going on is two things. Demand is very strong. The world is coming out of lockdown. All of the mobility indicators are by and large pointing up. Driving is up, flying is up, the economy is recovering. And with that, oil demand is coming back. And at the same time, the shareholders of publicly listed companies are really encouraging listed oil and gas companies not to invest. And as a result, there is almost no capex response to these very high prices. There is a pipeline of oil projects to be done with break-evens in the $40 range. Oil is 80. These margins are very wide. As far as I can see, there is not a single listed oil company, at least the ones that we cover, who are saying, look, we're responding to this with higher capex. So the price signal is somewhat broken. There's an awful lot of tension in this system. OPEC can do a lot, but they can only do so much. I would say the tension in this system largely has to be resolved by price and getting up to a level where there's a degree of demand erosion. OPEC can cool down the market a bit, perhaps, over the next coming months. But I think what's also in the back of OPEC's mind is, well, look, we can add some more barrels, but what would happen if that didn't cool down the oil market? Where would we be then? And so perhaps with that question in mind, they're playing it rather cautiously.
Martin, good morning to you. It's Karen jumping in. I want to ask you about the impact for the airline industry, because we know the sector has been struggling to get back on its feet. It's battling the wage shortages and rising costs, not to mention very choppy demand still around COVID restrictions. What's the pressure coming through from jet fuel? Because I noticed a couple of weeks back you were looking at the jet fuel crack spreads improving. What's the impact then for the airline sector in terms of pressure from those high fuel costs?
Yeah, no, this is a real quandary for the airline industry in the sense that, look, normally airlines hedge, but what we've now seen is that when there is an announcement, say from the United States a couple of weeks ago about opening flights from the UK into Europe, which start from sometime in November, is that financial investors immediately translate that into expectations for higher jet fuel demand, and rightly so. That is what it means. Then immediately, jet fuel prices start to rally. What airlines need to do in practice, they need to figure out, okay, how many flights are we going to reactivate from Europe to the US in this example? How much jet fuel, therefore, do we need? How much do we hedge? That takes a couple of days at a minimum to sort of do some of these numbers. So the financial community effectively front runs that and immediately reprices jet fuel, whilst the airlines struggle to put their hedges in place quick enough. And simply the practicalities of all of this makes it difficult for airlines to hedge. And therefore, yeah, rising jet fuel prices at the moment, which they clearly are, because we have rising crude prices. And on top of that, a rising jet fuel crack is a headwind for airline profitability.